It's Tuesday, October 25th, 2016, a day for posterity. This is Ron Feinstein, Consummate Price Behaviorist at New Wave Forecasting. It's a little-known fact that I was born a few blocks from Wrigley Field. The fact that the Cubs are in the World Series now, boy, makes me wonder if the bull market in stocks is finally over. Moving on to starting off with crude oil. You know, never was a fan of this market. I never thought it was anything but a top. And now I'm wondering just how much of a top it really might have been. I've been talking about $49. I admittedly was hoping we were going to go to $51.50 first. The market was so weak that I think all we could do was knock out some strange looking triangle here. So again, if we can hold $49, this should be support, then I think we could have a much more interesting bounce and maybe just spend a couple of weeks, maybe between now and the election, meandering sideways. But if we don't hold 49, I think we could be at 47 by Friday. So again, this could be a massive top here. We'll see how the market trades tomorrow. Very important, and the report could certainly factor into this one. Nat gas was absolutely destroyed today. I didn't think it was going to go through 325. Obviously, a lot of other people didn't either. So this move down, there may be some buyers here near 310. I honestly think that we now could test 305, 302, and where I think you pretty much just have to buy as a matter of principle. As far as wave counts go, this has really messed things up here, this dramatic drop here, because the simple truth is commodities are not supposed to move 10% in a matter of days. There's something clearly wrong with this. It actually suggests that this is a really important top now instead of a continuation pattern. It really says that that was just it for nat gas, and it'd be really a question of just how bearish the market might be. We may not trade back above 325 again in the life of this contract. Of course, it's only a December futures, currently trading at 312.5. Okay, and as far as gold goes, the one thing I can say positively in my favor, even though I may just be totally wrong on this, is that I recognize that the market didn't fall apart, leaving that bull trap down there. So, you know, 1278, 1280 is pretty much my line in the sand. I find it hard to believe this isn't the whole thing as a base, which would definitely suggest a move back up to 1315 to 1325 on a strong push above 1280. If it comes, it comes. I still think the best bet is that we're going to go back down again, head towards 1250. But clearly there are more buyers in this market than previously anticipated. When it comes to the euro currency, the story here, I believe, is exactly the same. The market should be in a terminal wave. It may have already bottomed a terminal wave, in which case we need to be headed back above 110 to fulfill some wave obligations and possibly even test 110.50. So the market currently trading at 109.06. I think the better play here, frankly, is on the buy side than the sell side, but a move above 109.30 with any kind of oomph would certainly be a pretty solid indication that a much more significant retracement in line with this forecast is underway. So again, I think you could wind up seeing a lot of people scurry here if the euro starts to head higher. Okay, the 10-year held the bottom of the channel, and that's about all we can really say for it. I think it's some kind of strange diagonal triangle or wedge-type deviation pattern. The notes are been trading here in this range for so long, I don't think these patterns mean much of anything. But I do still think the long side is the better side as the trend remains up. And I don't think we'll trade back below this 129.30 level. I think whatever low we put in today really should be it. And again, do not chase rallies. Buy this one on dips, courtesy dip scenario. Okay, Apple reported, and it wasn't good. The market had been down earlier, and I had already put out my bearish piece on the intraday update. You know, it's really going to be important to see whether or not the S&Ps are going to hold the recent low. This is clearly, as I've said for some time here, a corrective rally. Whether or not we're going to go to 157 and make the 76% retracement, we can't say we cannot still get there. The trend is still theoretically up, and given how we're getting in this proximity to support, the bottom of the channel, it'll be interesting to see. If the buyers come for Apple on a lower opening tomorrow, the S&Ps may not be done, but I don't like the market. Just a lot different to not like the market at the 62% retracement at 2147, versus not liking it at 2132.50 last. So again, conventional trend line looks to be coming in around 2128 and a break of 2123. And boy, you know, all I can say is I talked about the potential of this courtesy rally scenario, and we'll see if it plays out. Nice momentum divergence on the move up to the new high, but you can see how we're clearly coming to some conventional and detrended RSI support. And closing out with the NASDAQ. You know, it's by no means a done deal, but it is sure starting to look like the anticipated move, even though it went a whole lot further than thought, was just nothing but a corrective B wave. We're coming down into an area that should be support because we spent all this time here trading between essentially 48.50 and 48 even. So we'll see if we can hold 48.50. If we do not, all I can say is this could start to accelerate on the downside, which would be consistent with an impulsive decline. And again, I had been talking about this courtesy rally scenario for some time on intermediate proportions. We'll see. We're clearly on support here as well. If it busts, things could get a whole lot worse on the downside. So, you know, one thing in my closing I would have to say today is if the crude oil is a total bust, there's very little reason to think that anyone's going to come and buy the S&Ps and or Apple. So tomorrow's opening, very important. Got to watch $49 level, give or take, in the crude oil. Because if it goes, I got to believe the S&Ps are going to go. So hope the Cubs can catch up to the Indians here soon. Anyway, this is Ron Feinstein, New Wave Forecasting, October 25th, 2016. Real-time update tomorrow in the morning and another video tomorrow night.